Hello, my name is Kemper-Zanck with Premier Mortgage Resources. Thanks for joining me. I've been a mortgage broker since 2010. I'm also a continuing education instructor for realtors in Oregon, and I also own a nationwide online mortgage school, which teaches new mortgage people that want to come into the industry how to do this job. So today I want to talk to you about the home equity conversion mortgage. This mortgage is really a lifesaver for a lot of people. This one I am talking about people who are purchasing a home. I do have another video for people who already own a home, they don't plan to move. It is for refinances. So if you're interested in that video, please, at the end of this one, I'm going to give you the contact information. Let me know if you would like to access or have me send you that video also. The Department of Housing and Urban Development is the entity who created it. It's an FHA loan. It is for people who are 62 years and older, although if there is a spouse that is under 62, you can still get the loan. Let's talk just about a few statistics. 75% of retirees' net worth is in their home, but it's not liquid. The average person drawing Social Security in retirement age is $1,300 a month. 1/3 of the U.S. population heading into retirement is prepared for their financial success during retirement, but that means 2/3 aren't. So this is the group, and even beyond, that we're trying to help. In a nutshell, the home equity conversion mortgage, or the HECM, is allowing you to put down a lot less on your final home, or at least potentially your final home, and keep a lot of your assets liquid, but still end up with no mortgage. So let me tell you a few more details about the loan so you can kind of wrap your brain around it, because it's different, but it's wonderful. So a few facts. First, you do have to start out with taking a counseling session, either in person or over the phone. The government really wants to make sure that they're taking care of you and that you fully understand this loan. There's a lot to it, so we want to make sure that you're hearing it from two different entities, from me and from another professional. So you must live in this home as a primary home. You will stay on title and the equity is yours. When it comes to how long do you need to live in the home to make it your primary, it is 6 months and 1 day. You can own other homes, but they can't have home equity conversion mortgages on them. If for some reason you don't live in the house for 12 months, the note needs to be paid off. So for instance, if you moved into some type of assisted living, they do give you some time to make that transition. When the clients are both deceased, the heirs have 6 months to deal with the home. And there's 4 avenues. If there's equity in the property and they're going to just sell the home, then they just sell the home and they get to keep the equity, just like a normal mortgage. The last option is to just pay off the mortgage and keep the house. So they would just need to get a loan to pay off whatever the debt is. The debt cannot get passed to the heirs, so it's a non-recourse loan. In the promissory note, it says that the note is due when those on the loan are 150 years old. So let me give you a couple of examples. So let's say your home is worth $400,000 and you're going to sell it somewhere else, but you're going to now then move closer to family, move to your final home in a different location. You've sold the house for $400,000. You have a choice then when you buy the next house. If you don't want a mortgage, which most people don't, you don't have to put down the full $400,000. You could put down just $200,000, and that ratio can change. You might have to put down more. You might have to put down up to maybe 75%. But if you're 80 years old, this is the easiest number for me to work with. If you're 80 years old, you can put down 50% of whatever the purchase price is. So again, if you're going to buy another house that's $400,000, you could put down $200,000, still end up with no mortgage, and you could keep the other $200,000 and do something else with it. Maybe the house needs work, maybe you need a savings account, maybe you want to do a little bit more traveling, maybe you want to donate money or give some to your heirs. There's a long list of things that you can do with that money, and the beautiful thing is it is tax-free. Now, one really wonderful thing about this situation is that let's say you are 80, you've sold the house, your current home, for $400,000. If you want to kind of step up your living and even buy a more expensive house, maybe you're just moving to a more expensive area, or maybe you want your last house to be a really nice house or nicer house. So you could actually, because you're 80, you need to put down 50%. You could purchase a home that's, let's say, $600,000, and you use $300,000 of your dollars. Keep the other $100,000, and you could still have no mortgage. So there's more to it because we do build on that mortgage. If you don't have a mortgage payment, yet there is a $300,000 lien on your property, then that monthly no payment is actually just added onto your mortgage. So the $300,000 mortgage will grow to $301,000, let's say. And that's just an example. There's real calculations that would go with it. $301,000, $302,000 the next month, $303,000, let's say, the following month. So it will go up, but so will your equity. The average is 4% per year. Granted, there could be a dip, right? We've experienced those before. So the beautiful thing about this loan is that it's a non-recourse loan. So even if your mortgage ends up being upside down with the value of your home, it's okay. You get to live there for the rest of your life. Your heirs will have 6 months to sell the house, or they can refinance it. They can buy it for 95%, or they can walk away. So there's choices for your heirs, but they're not going to be responsible for the mortgage. And if one spouse passes away, the other one gets to live there forever also. So there's definitely a security net, and you can live in your home a lot longer. So think about what you would do with those extra assets that you get to keep. When you're purchasing a home, again, you don't have to put the whole kit and caboodle in. Please contact me if you have any questions at 541-749-0610, or you can also email me at kathy.Kemper-Zanck, and there is a hyphen in there, at pmrloans.com. Have a great day.